Marta, first of all, thanks for being here. We appreciate your participation for this interview. Latin America countries lack measures to attain investment grade status. In this regard, what should be the priorities on the region of the region's major economies, and which countries stand out, whether positively or negatively at present?
So when we're looking at the region as a whole, and when we're actually dividing what companies go into investment grade and what not, it's important to understand the main factors. So growth is one of the growth in GDP is one of the most important factors. So generally, companies that have a higher growth per capita tend to have a higher rating. The other things that we are always monitoring is how is the fiscal discipline, because how are they financing that growth is another important factor, and then overall governance on the country. So what we have seen in the past couple of years is there has been a shift towards non-investment grade, and it has been in some cases due to lower growth. In other cases, there's been a deterioration on governance. So as we're looking forward in terms of what we will be monitoring for getting back into the investment grade category, it would be along those lines. We would want growth to return. We would want that growth to be measured in terms of the fiscal side. And of course, we want to have governance and overall framework of institutions that is healthy.
And regarding that, what is the current outlook?
I think right now we have different pockets of countries. There's been a lot of resiliency in the Caribbean in terms of growth. We've seen, and in Central America, there's been a lot of resiliency. We had a couple of tough years in the Andean region, given the impact of higher interest rates, it seems, and the lack of investment that we have seen in that part of the region. It seems like things are turning now. So it's definitely an area of focus. We've seen Brazil returning to growth as well. So that's kind of what we're monitoring.
Okay, talking specifically about infrastructure, what are the main attractives for foreign investment in Latin America? The region is naturally favored in terms of renewable energies. Would this be the main focus? Is there anything less obvious that also makes sense?
So in terms of infrastructure, there's still, as you mentioned, the shift to renewable is still important, and it will be important given the energy transition push in the region. But the reality is the region still needs other infrastructure. The more traditional toll road ports, that still is needed because development in the infrastructure side, it's still uneven in the countries. The big cities and the areas surrounding the big cities tend to be healthier, but as we want that growth that we were talking about first to continue, we need that infrastructure to actually be spread through the region. And an interesting area of growth that maybe people are not paying as much attention, but what we're seeing growing a lot is digital infrastructure. So when we think about the AI push, the role of 5G that is happening. So we're seeing a lot of infrastructure being developed on that side that we're expecting it to continue to grow as 5G gets implemented across the region. So that's one that people might not be as focused on, but that we are seeing a significant amount of growth there.
Perfect. There is a mix of expectations regarding interest rate cuts. Everyone is talking about that always. By the world's major central banks, mainly the United States, the Federal Reserve. So in general, it seems that the pace will be slower than initially thought. So what are the short-term impacts for Latin America?
So I think we have to make like one distinction. The pace on reduction in rates in the US probably will be slower, but we are seeing the central banks in Latin America already starting to reduce, and the reality is Latin America started to increase before the US. So when we look at the impact of the US being a little slower, in the region I think we have to split it in two sides. One side would be, given that the region is already reducing, we're seeing growth again starting in the region, and we're seeing consumption again starting, and we're seeing some of that in Brazil, we're seeing some of that in Chile, and we are seeing as well the financial market more active, like the case of Brazil. So that is tied to the region starting to reduce much quicker. Now, the problem or the question that happens with regards to US being slower is what happens with currencies in the region. And so then we have that typical problem of a strong dollar and the currencies becoming basically weaker, which is what the central banks are trying to grapple right now. Do they go to the rate that the economies need to grow, or do actually they go slower to avoid the negative loop of another bound of inflation and basically tied to currency devaluation?
Perfect. Compared to 2019, before COVID, how would you describe Latin America's landscape regarding foreign investment, particularly in infrastructure? As a whole, is the region doing better or doing worse, and why?
That's an interesting question. I think there's like multiple aspects to that. So I think when we compare where we are today versus 2019, the risk-free rate is much higher. So if you're a foreign investor, you're getting paid significant amount higher to stay in your local market and not have emerging market risk.
Yeah.
So the pool of assets that are looking at emerging markets is smaller. So by default, that has made it more expensive, and the returns are more difficult to achieve if you're actually investing in emerging markets. So you're having a less pool of assets, so that part actually makes the equation be better when money was cheaper in 2019. Having said that, the fact that there's less people looking at the same assets makes it a very attractive opportunity for the people right now that are willing to do infrastructure. And as we said before, there's still a lot of need and a lot of projects that are very interesting. So we are seeing a lot of players like private equities or pension funds, which actually have a longer time horizon, being very interested in the region. So in terms of outlook and how we're seeing in the infrastructure space in the next 12 to 24 months, I think if we're looking at it in terms of the local dynamics, in an environment where you're having lower interest rates, it should be favorable to see a more supportive growth story. And the reality is governments are focused on infrastructure investment and infrastructure growth as one of the drivers for growth for the region. So we have generally a positive stance for the sector.